Hello and welcome to the course again, and in the never-ending quest to figure out where markets may be going. One of the things that you can use is the Commitment of Traders report. Comes out every Friday from the CFTC in the United States, and as you can see, I am actually on the Oanda site because it's one of the easier charts to read. It's freely available to the public, but you can get it at the CFTC site itself as well at cftc.gov. Now, this chart has several different parts, and this is speculators that we're looking at, and that the non-commercial positions. That's who we want because these are the people that are in the market to make money. It doesn't do you much good if you're looking at what a company like Coca-Cola is doing, for example, trying to hedge the euro. That has nothing to do with the price, and that just is them doing business. But on this chart, you can see that we have a histogram, and the histogram is interesting because it gives us a zero level, and if we break higher above the zero level, it shows that we have a net long amount of positions. That means more people are interested in going long than shorting. And that shows that, for example, over here, somewhere, towards the end of the chart, you can see that people are buying at these prices and trying to push the market itself higher. You can see that price itself has been drifting higher, but at the same time in the futures market, volume has been increasing. This is open interest. Now, open interest is both long and short contracts, but the more volume, the more realistic a signal is going to be reliable. This is one of several ways to get a glimpse as to what traders are doing. Another thing that I would point out, though, so when you're looking at futures markets, so for example, the Australian dollar, it's pulling up the Australian dollar USD pair, essentially. This is all priced in US dollars. This gets a little bit different. For example, if you're going to pull up the Canadian dollar, because then you have to start thinking in terms of upside down. It's not the USD/CAD pair, it's the Canadian dollar against the US dollar. They also have all of the major currencies coming out of Chicago, including the Mexican peso too, because it's a North American exchange. It makes sense. But you can see how price rolls right along. And now people are starting to look at this every Friday to give an idea as to where the speculators are trying to go. This is just another tool. Probably nothing to make a trade by itself based upon, but it can give you an idea as to where the market sentiment is.